If you are over 60, own your home, and have watched your housing costs climb year after year, there is something happening in Washington that you need to understand, but there is also one very important detail most headlines are leaving out. Congress is considering new tax legislation that could give some long-time homeowners a much larger federal tax break when they sell their primary residence. And for seniors who have owned the same home for decades and watched its value rise dramatically, that could potentially mean tens of thousands of dollars less in taxable gain. But here is the catch: this is not a new nationwide property tax exemption. And it is not a law that automatically wipes out your annual county property tax bill. The proposals are mainly about federal taxes on the gain from selling a home. So before you get excited, or assume you qualify, let me explain exactly what is being proposed, who could benefit, what is already available right now, and what you should actually do. For homeowners over 60, the distinction between these different taxes is extremely important. Your annual property tax is generally imposed by your state and local governments, while federal income tax rules apply when certain types of income or gains are realized. That means Congress cannot simply announce that every senior in America no longer has to pay their county property tax bill. Your local property tax exemption, freeze, credit, or deferral is still controlled primarily by your state, county, city, or other local taxing authority. What Congress can change is the federal tax treatment of the profit you may realize when you sell your primary residence. And that is where the new proposals become interesting. Right now, federal law already gives qualifying homeowners a significant exclusion on the gain from selling a primary residence. Generally, a qualifying individual may exclude up to $250,000 of gain, while a qualifying married couple filing jointly may exclude up to $500,000, provided they meet the applicable ownership and use requirements. Those limits have been unchanged for decades. Congress is now considering legislation that would increase those amounts. One of the major proposals is the More Homes on the Market Act, H.R. 1340, which was introduced in the House in February 2025 and referred to the House Ways and Means Committee. The bill would increase the exclusion from $250,000 to $500,000 for an individual and from $500,000 to $1 million for married couples filing jointly, with inflation adjustments going forward. Now think about what that could mean for someone who bought a home 30 or 40 years ago. Imagine a homeowner purchased a house for $150,000 decades ago and today could sell it for $700,000. The difference between the purchase price and the eventual sale price can create a substantial gain, although the actual taxable gain calculation can be more complicated because certain improvements and other adjustments may affect the cost basis. Under current federal rules, a qualifying single homeowner may be able to exclude up to $250,000 of that gain, while a qualifying married couple may exclude up to $500,000. If Congress were to increase those limits as proposed, the amount of gain potentially sheltered from federal income tax could become substantially larger. But remember, the bill is a proposal. It has not become law. Congress, Gov currently shows H.R. 1340 as introduced and referred to committee, not enacted. And there is another proposal that is particularly relevant to the audience this video is targeting, homeowners who are 65 and older. On May 29, 2026, Representative Nicole Maliotakis introduced H.R. 9064, a bill that would temporarily increase the capital gains exclusion for qualifying seniors who sell a principal residence. The measure was referred to the House Ways and Means Committee. The official government record confirms that it is a proposed bill and has not become law. This is important because you may see headlines or social media posts saying that Congress has already approved a giant new property tax exemption for everyone over 60. That is not what the official records show. There are proposals being considered, but a proposal and a law are two very different things. So why does this matter so much for older homeowners? Because many seniors have built enormous amounts of equity simply by staying in the same home for decades. You may have bought your home when the price was a fraction of what comparable properties sell for today. You may have paid off your mortgage. You may have renovated the kitchen, replaced the roof, added rooms, or made other qualifying improvements. And now, when you consider downsizing, moving closer to family, relocating to a lower-cost state, or moving into a retirement community, the tax consequences of selling can become a major part of the decision. A higher federal exclusion could potentially reduce the amount of gain exposed to federal capital gains taxation for qualifying sellers. That is the real opportunity these proposals are trying to address. But here is something even more important: you should not wait for Congress to act before checking the tax benefits that already exist. If you are 60, 65, 70, 75, or older and own your primary residence, your state or county may already offer a senior exemption, homestead exemption, assessment freeze, property tax ceiling, credit, or deferral program. These programs vary dramatically. Some depend on age, some depend on income, some require you to occupy the home as your primary residence, some reduce the assessed value, others freeze the taxable value or postpone payment rather than eliminate the tax. And in many places, you have to apply yourself. There is no universal federal system that automatically checks your age and sends you every exemption you qualify for. That is why one of the smartest things you can do right now is look at your actual property tax record. Do not simply look at the amount you owe. Look at the exemptions and classifications listed on the statement. Is your homestead exemption active? Is there a senior exemption? Is there a freeze? Is there a disability or surviving spouse benefit that could apply? Does your county offer a deferral program for older homeowners with limited income? If you have lived in the same property for many years, do not assume that everything available to you was automatically added to your account. And if you are already receiving a senior property tax benefit, do not assume that it will continue forever without any action. Some programs require annual applications or renewals. Others have income thresholds that can change. Some have different rules for surviving spouses. Some programs are permanent once approved, while others require periodic certification. Your county assessor's office is usually the place to start. Ask a very simple question: can you tell me every property tax exemption, freeze, credit, or deferral currently available to me based on my age, income, ownership, and primary residence status? Then ask a second question: which of these benefits am I currently receiving, and which ones am I not receiving? That second question is where many homeowners can uncover something they never knew existed. Now let's go back to the congressional proposals, because there is another reason homeowners should pay attention. H.R. 1340 is not specifically a senior-only bill. Its proposed increase would apply more broadly to qualifying sales of principal residences. That means the potential benefit is not limited to people over 60. However, older homeowners may be especially interested because longtime owners are more likely to have accumulated substantial appreciation. The bill's official summary says it would raise the exclusion to $500,000 for individuals and $1 million for married couples filing jointly and adjust those amounts for inflation. There is also a separate federal tax change that seniors should know about because it is already part of current law rather than merely a proposal. The IRS says taxpayers who are 65 or older may be eligible for an additional $6,000 senior deduction per person for tax years 2025 through 2028. Meaning a qualifying married couple could potentially receive an additional $12,000 deduction if both spouses qualify. The deduction phases out above specified modified adjusted gross income thresholds. This is a federal income tax benefit, however, and it is completely different from an annual property tax exemption on your house. That distinction is worth repeating because it can save you from making a costly mistake. A federal senior deduction does not automatically reduce your county property tax bill. A proposed increase in the capital gains exclusion does not automatically reduce your annual property tax bill. And a state senior property tax exemption does not automatically give you a federal capital gains exemption when you sell your home. These are three different pieces of the tax system. The smartest homeowners understand which one they are dealing with before they make a financial decision. So what should you do if you're over 60 and own a home? First, pull out your most recent property tax statement. Second, check every exemption currently listed on it. Third, contact your county assessor or tax collector and ask specifically about senior exemptions, homestead exemptions, assessment freezes, tax ceilings, credits, and deferral programs. Fourth, if you are considering selling your home, do not make the decision based on a YouTube headline or a social media post. Talk to a qualified tax professional about your actual cost basis, your purchase price, major improvements, selling costs, filing status, ownership history, and how the current federal home sale exclusion applies to you. If Congress changes the rules, your professional can then tell you how the new law affects your specific situation. And there is one more thing you should be watching: whether these proposals actually move through Congress. H.R. 1340 is currently listed by Congress. Gov. as introduced and referred to the House Ways and Means Committee. H.R. 9064 was introduced in May 2026 and referred to the same committee. Neither should be presented to viewers as an enacted law. That means you should be very cautious about anyone telling you, Congress already approved this, or every homeowner over 60 is now exempt. Those statements go far beyond what the official legislative records currently establish. The good news is that you do not have to sit around waiting for Washington to make a decision. There are two separate tracks you can follow. Track 1 is the benefits available today, your state and local property tax programs, your homestead exemption, your senior exemption, your freeze or deferral options, and the federal senior tax provisions already in effect. Track 2 is the legislation to watch, proposals that could change the federal tax consequences of selling a primary residence. If you are not planning to sell, your immediate priority should generally be checking the property tax programs available where you live. If you are thinking about selling, downsizing, or moving, then the federal capital gains proposals become much more relevant. And this is where the tax break inside the headline becomes especially interesting. The biggest potential benefit may not be a check from the government or an automatic reduction in your monthly expenses. It could be the ability to keep more of the money you have built up in your home if you eventually sell and qualify under the new rules. For a homeowner who has owned the same property for decades, that difference could be meaningful. But until Congress passes a proposal and it becomes law, you should treat the proposed numbers as exactly that, proposed numbers. So, if you are over 60 and own your home, here's your action plan. Check your property tax statement. Find out what exemptions you already have. Call your local assessor and ask what you are missing. If you are 65 or older, review the federal senior tax benefits currently available to you. And if you're considering selling your home, have a tax professional calculate your actual potential gain before you make a decision. Finally, keep an eye on the congressional proposals because the rules surrounding home sale taxation could change. The bottom line is simple. Owning a home for decades can create enormous financial value, but understanding the tax rules is what helps you protect that value. Congress is considering proposals that could make the federal tax treatment of home sales more favorable, including measures that could significantly increase the amount of gain qualifying homeowners can exclude. But those proposals are not the same thing as a nationwide senior property tax exemption, and they are not yet law. If you own a home and you're over 60, don't just ask, how much is my house worth? Ask the more important question, what tax benefits am I entitled to today, and what could change if I sell tomorrow? That is the question that could potentially save you far more than simply watching your home's market value go up. And if you know a parent, grandparent, neighbor, or longtime homeowner who has owned the same house for decades, send them this video. They may already have tax benefits available today, and they may also want to know what Congress is considering before they make their next major housing decision. Subscribe, because when the rules change, you want to understand them before you act.